Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing new holding stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. New Holdings is a digital banking platform. The company provides individuals in Brazil, Mexico, and Colombia access to banking. It has 60 million customers and 12.6 billion in customer deposits. New offers personal loans, debit cards, credit cards, insurance, traditional checking and savings, plus many more options. They mainly serve the Brazilian population, but added Mexico in 2019 and Colombia in 2020. The company makes most of its money from fees and the interest spread on credit cards and loans. They are headquartered in Sao Paulo, Brazil, and was founded in 2013. The ticker trades on the New York Stock Exchange, Deutsche Börse, Mexican Bolsa, Sao Paulo, Colombia, and Munich Stock Exchange. Let's get started with the model. This is a large cap company, 21 billion market cap. They're trading at $4.50 a share, and they have 4.6 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. They did have positive free cash flow in 19 and 20, then a big negative in 2021 and the trailing 12 months. Net income is the profit or loss on the income statement. It's revenue minus expenses, and that's negative each year. Revenue is the sales for the company, and that looks great. It grows from 360 million to 1.5 billion. This is the company's income statement. The top line is the revenue, the sales. Below that is their credit loss provisions. These are funds they post for future potential losses. Below that is their interest expense. Then you have other income and expenses. These are all the gains or losses not part of the company's core operations. Your pre-tax income, your taxes, and the bottom line of the income statement is your net income, which is negative each year. Here's some info from their latest quarterly reporting. At the end of the first quarter, they had 60 million customers. That's up from 37 million in the first quarter of 2021. That's a growth of 61%, and they grew 58% from 2021 compared to 2020. Of the 60 million customers, 47 million are active. That's a 78% activity rate. Their business volume in the first quarter was $16 billion. That's a growth of 112% from the prior period last year. The average monthly revenue per customer is $6.70, and it only cost them 70 cents to service those customers. So that's a really nice spread. Last year it cost them more, 80 cents, and the revenue was only $3.50. So you can see this company's improving in every which way. They have 12.6 billion of customer deposits. That's a growth of 129%. They earn interest on 3.1 billion of their portfolio. That's a growth of over 400%. And their revenue for the first quarter is 877 million, up from 245 million. That's a growth of 258%. Gross profit of 294 million, giving you a gross margin of 34%. That is down from 47%. They do keep their credit losses pretty low at only 3%. So that's a loss of 45.1 million, giving them 10.1 million of adjusted net income. Last quarter was 3.2 million, and before that it was negative. In the first quarter of 2021, it was negative 11.9 million. This is the company's statement of cash flows. The top line is operating cash flow. That's how much cash the company generates or loses from its operational business. They did have a big negative in the trailing 12 months in 2021. They invested 38 million in capex in the trailing 12 months. Operating cash flow minus capex gives you your free cash flow. And they did IPO at the end of 2020, so they added a lot of capital stock, 3.4 billion. Let's look at their capital structure. 4.8 billion of equity, 168 million of debt. They're 97% equity, 3% debt. And I gave them the middle whack on Finbox, 8.3%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 19 billion. We discounted those numbers back to today's and weighted average cost of capital. We get a value of the company of $16.5 billion. We divide that by 4.6 billion shares. And we get a calculated stock price of $357. They're trading at $450, so they're trading at a 26% premium. It's a sell according to the model. So it's really hard to value a bank. You generally wouldn't use a DCF model to value a bank, but I did it anyway just to see what the result would be. The way I calculated their future free cash flows, I just took the average of their 2019 and 2020 free cash flow, which is $620 million, and I grew it by 20%. The company projects their 2024 revenue to be $7.7 billion US. Their future growth is projected to be exponential. The website Simply Wall Street is really low on this one. Their valuation is $125. They're saying the stock is 260% overvalued. 4 analysts priced this stock and the average price target is $8. The low is $5, the high is $11. This is where the stock has been trading since it IPO'd at the end of 2021. It looks like it IPO'd at about $11.75. And that was its highest price point, and it's pretty much only gone down since then. There was an uptick at this point and this point. You can see there was a ton of selling activity this day. If it's a red bar, that means the sell orders are higher than the buy orders, and the stock price goes down. If it's a green bar, that means the buy orders are higher than the sell orders, and the stock price goes up. They offer their service in 3 countries, Brazil, Mexico, and Colombia. 1/3 of the adult population in Brazil is a customer. And Brazil's S&P rating is below investment grade. When a rating is BBB or higher, that means it's investment grade. If it's BB plus or lower, it's below investment grade. So Brazil and Colombia are below investment grade. Mexico is investment grade. The US's rating was AAA. I think they may have changed it to AA plus, which is the second best rating. So if they continue to grow in Brazil, they're not going to have that much more opportunity to get new customers. They're going to have to do a lot of upselling. But there's lots of opportunity in Mexico, Colombia, and many other Central and South American countries. In the first quarter of 2021, they had 25.5 million active customers. That grew to 29.9 million, then 35.2 million, 41.1, and 46.5. They're doing an amazing job at growing their customer base. And it's funny that the stock price keeps going down as the company keeps growing. In the first quarter of 2022, they added 5.7 million customers and 22.5 million year over year. Their revenue is up 226% year over year. Deposits up 94% year over year. Their non-performing loans that are over 90 days past due are at 4.2%. Which are below the market average. That's a really important stat to look at because any bank can provide loans to people, but if a lot of their loans default, then the bank's going to be in trouble and it's going to lose a lot of money. The stock is down 56% in the past 52 weeks while the S&P is down 3%. The 52-week low is 326, the 52-week high is 1224. And the stock is trading below its 50-day and 200-day moving average. This is a really popular stock. Over 50 million shares are traded each day. 70% of the shares are held by institutions and over 4% of the shares are shorted. If you put $10,000 into this company when they started trading, you'd be at $4,400 today. That's a 56% loss. 23% of the company is held by institutions, 22% by private companies, 21% by venture capital and private equity firms, 18% by the general public, 8% by public companies, 5.5% by hedge funds, and 3% by insiders. Their employee count has gone up a bit in the past year. They're currently at 5,400 people. Their biggest shareholder is Rua, California at 21%. Not too familiar with this company. Sequoia is a big venture capital company. They own 12%. Another VC, DST, they own 9%. The Chinese video game giant Tencent owns 6%. Another VC firm owns 5.5%. And Warren Buffett owns 2.3% of the company. He has over 100 million shares. Let's look at their financial ratios. We can't look at the PE since they have negative net income. Price to sales of 14, that's stock price over sales per share. The market median is 3, the average is 9. Price to book of 4.3, that's stock price over book value per share. And we cannot look at the price to free cash flow since they have negative free cash flow. The best way to look at ratios to compare them to companies in the same industry. There are 20 companies in the same industry as New, and New is worse than average in every single category. They rank 17th in market cap of the 20 companies. A common way to value a bank is to look at the price to book ratio. And they have the worst price to book of all these companies. The average is 1.2, they're 4.3. They also have the worst price to sales ratio. To summarize, I have them trading at a 26% premium, but it's really hard to value a company like this. Banks are notoriously hard to value because you really need to understand how much money they've loaned out, their credit quality of the borrowers, and a lot of other factors. But to add another layer of difficulty, this is a Brazilian company, which is a much higher credit risk than a US company or a Canadian company. There's a lot greater chance of government interference. But a really encouraging sign is the company has some big backers. Some really important companies are backing them. And they also provide a really valuable service, because getting access to credit in Brazil, Colombia, and Mexico is much harder than getting access in the United States and other developed countries. Because for most people, it's almost impossible to get a home or to get a car without getting a little help, without getting a loan from an institution. And that's what this company does. I rank their free cash flows 1 out of 10, their revenue 8 out of 10, and their ratios 2 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.